Let's get right to the markets. It's been an interesting start to the year. We're seeing markets rebound a bit here in February. January was a tough month. Has investor sentiment now turned to the better this month?
Well, I guess it's all a function of perception and how you perceive sentiment. And I think the right way to see it is that the spectrum of what we all believe and can kind of agree on is what's already been priced into markets and therefore does not happen. And then something else happens. So the right way to see it is that if you look at the progression from 2012 through 13 into 2014, investor sentiment just kept clustering into tighter and tighter bandwidths, where today there's very few people that are very optimistic and very few people that are very pessimistic, whereas 2 years ago there were a lot of optimists and a lot of pessimists and fewer in the middle, and a lot more, if you will, opinions. Whenever we've seen in history that process where sentiment clusters, you either get a big up move in the market or you get a negative move. In the last 5 weeks, that sentiment has just shifted to be slightly more pessimistic as the year got off to a not so pretty start. And what that's done is kept that tight cluster. So my view is that you have to make a fundamental decision that up a little move that the market fundamentally believes in, that everybody's kind of betting on, is what doesn't happen. And then you either get a big up year or you get a negative year. And my bet would be a big up year because I think the surprises are on the upside.
Define big. What do you mean by that?
Not too different than last year. The history of big years like last year is that pretty often they're followed by relatively similarly big years. Sometimes not. It's not a perfect rule. There's no rule about that. But fundamentally, to see a up 20 or more would be a real natural thing to see from this tight clustering. To see an up 10 would be a not likely thing because sentiment clusters between a 6% year and a 12% year. And whenever sentiment clusters, that just doesn't occur.
The market could perform much better than a lot of people are thinking. I mean, some people think we're into single-digit gains this year for stocks.
It's an interesting feature. First, people always tend to think that average is normal. In markets, average is not normal. The average is made up of extreme returns that average out to normal. And in fact, negative years and up 20% years are much more common in market history than years between 0 and 10%. But most people typically expect something between 0 and 10 when it doesn't happen as often as negative or up a lot. And yes, I do believe that clustering into the realm that doesn't occur very often is something that likely leads to investor surprise in a big way.